So we're going to go through the blog post we have on our website, and these are currently free to read, but this course here is going to be giving you a better understanding of what we have there already. So the very first blog post is an introduction to cryptocurrencies. We call it Crypto 101. There we looked at what is cryptocurrency, how is it first gotten, what is the history of cryptocurrency, what are the types of cryptocurrencies, what are the current use cases for cryptocurrencies, and what is the presence of crypto in Africa. So this post was written as at 2020 October, so some things are going to be updated in this course. First, what are cryptos? Cryptos act like real money. That's because they were created to replace money as we know it. So in a sense, they are real money, but they take the form of a virtual or digital identity. And the good thing about today's cryptos is that they are not controlled by any central bank or any government. It is community led, and that is really great. And again, it's built such a way that it's highly secure. So we use what they call cryptography, and again on blockchain. So cryptography makes it difficult to decrypt. Then blockchain makes it difficult for you to hack it because there's no single point of failure. Alright, so when we're trying to explain cryptocurrencies, we try to draw a similarity between crypto and gold. So most times we call it digital gold. Right, so it's like gold because it's scarce and it has relative value. However, unlike gold, it doesn't have intrinsic value of itself. Neither does it have any physical form, and it's very much divisible down to a millionth of a unit. So it's way, if you think gold is great, greater than the dollar and other things, then you should know that crypto is a million times better than gold, especially when regards to money. Alright, so again, crypto has gone through a lot, but each time there's a challenge, it comes bouncing back bigger with the father Bitcoin, right? And as last year, we're getting set for some sort of regularization of cryptocurrencies as an asset in Nigeria. Sadly, before the CBN's banking ban this year. So in 2017, we had about 5 million unique crypto users, right? So it was still fairly new. It's still fairly new, in fact, because at last year, around September, we just had barely 100 million unique users in the world, and we have over 3 billion adults in the world, so there's still a lot more to come. So if you think Bitcoin's price is crazy right now, wait until you see until 1 billion people have adopted cryptocurrencies, and we're on that route now, given the fact that some countries are now looking to use it also as legal tender. How do you get cryptocurrency? It depends on who is answering this question, right? So if I'm the creator of a crypto, that's how I get it really. If I'm somebody who participates in the validation mechanism, that's how I get it. So either I'm mining it with my computer, I'm staking it with the fact that I got in early and I have so much. So we'll still explain proof of work and proof of stake much later. Or by distribution, maybe I got it via an airdrop, a pre-sale, or futures or regular purchase. I can get it from another person, peer-to-peer, or I can get it from an exchange, right? So those are different ways of getting cryptocurrency. So yeah, if you've not gotten any yet, by the end of this course, you know exactly how to get some for yourself, right? So just stay back and be patient. Giving you a good history of cryptocurrency. So the quest for something decentralized, something secure, and something digital has been on for over 50 years. Different scholars have postulated different suggestions, mostly in theory, right? But our first breakthrough of something really great for all of the world was when the internet came to be in the 90s. However, for crypto itself, we began to get public notice of Bitcoin, which is the very first crypto, in 2008. And that was the same year that the domain name bitcoin.org was registered. Then on 31st October, we got what we call popularly known as the white paper of Bitcoin today, which was titled, Bitcoin, a peer-to-peer electronic cash system. And that's what set everything in motion for the past 13 years. Okay, currently recording this in 2021. Alright, so first Bitcoin purchase or transaction took place in 2009. 2010 there were some hacks, and that was fixed because there had to be further development of Bitcoin. So yes, Bitcoin and mainly other cryptocurrencies as well go through regular updates and edits just to ensure that things keep getting better. right, on the blockchain. So that was it. And then in 2011, we had to have new cryptocurrencies. They had seen the opportunity with Bitcoin, but they had also seen the challenges, and they were looking to solve them. So we had other coins coming out: Litecoin, Namecoin, Swisscoin. Most of them have failed, nearly failed. Most of those ones that came out immediately after Bitcoin. So with that, we got to go forward. 2013 was a very busy year for crypto. We had more forks, all of those things. We began to get the buzz for other cryptos as well, that currently exist today, right? We have some of them like, so we had some, and that was the same year that we had a proposal for Ethereum by Vitalik Buterin, and all of those things began to see a lot of progress. Then we had Bitcoin ATMs. Then as the years went by, we began to have more and more developments, more and more buzz. Some countries giving sort of regularization, especially the emerging economies, so the smaller countries, so the smaller countries especially were the ones that gave the big, Malaysia, Singapore, Estonia. Now we're having El Salvador and Co. These are the kind of countries that have been giving a lot of support to crypto and crypto-based businesses, right? And we now have more companies that are looking to produce facilities for crypto enthusiasts. So whether it's Nvidia producing the chips, same with Samsung, or whether it's some power companies providing power for miners, it's been working and growing. So again, being the fact that it's also traded like an asset and it's still new, it's very volatile again because there are no regulations, right? So prices go up really fast sometimes and comes down really fast sometimes as well. That happened has happened almost every year, since 2013. Currently, it's down by almost 50% from 2021's high. So that's another thing you should also note of about crypto. Last year was a very big year for crypto, thanks to, or no thanks to, COVID-19 lockdown, and then of course the DeFi summer. Right, so there was a lot of buzz, and for Nigeria, the growth was over 200%. New report says that on so many platforms, Nigeria is among the top 5 of participants in crypto purchase, sales, remittance, Google searches, and all of those things. So we have had the space really, really grow from Bitcoin to now having DeFi and NFTs, right? So we have different types of cryptos. We had all of them. The underlying technology is the blockchain, yeah, and that's how it really, really works. Okay, so it's first, the idea is first economics and finance to make things better for human beings, to prevent the way the governments control money and end up impoverishing the poor. However, this economics and finance is powered by one of the most advanced technology we have in the world. So some cryptos are first what we call bearer cash, or majorly for payments, and that's like Bitcoin. Some are to support remittances like Ripple. Some is to enable an open internet like Ethereum, right? And they have different uses. Some are what we call DeFi tokens, and DeFi token is simply decentralizing finance. So the lending done by the bank, the investment done by the investment banks, the market making done by the market makers. Trying to decentralize everything to ensure that everybody can participate in these things. That's the idea of DeFi. So we have so many cryptos. Currently, there are over 10,000 of cryptocurrencies that we have. The most popular ones are Bitcoin, Ethereum, Binance Coin, Litecoin, Tether. That's a stable coin. We'll explain stable coin very soon. Tron, Chainlink, and so on and so forth. So what makes one crypto more valuable than the other? The number of factors. First mover advantage or early mover advantage, a strong team, a strong value proposition, or utility. What exactly can that token be used for? Is it just to be another payment system in the world that competes with Bitcoin, or does it solve something more particular? Network effect, again, how many people are using it? The more persons are using it, means that the more popular it is, means that the more people that will also want to use it because it's already popular, and then it gets even more popular, right? These are things you should know. Security, how is it secured? What's the blockchain like? Is it proof of stake, proof of work? How many validators do we have? And how many people are securing the network really? How easy would it be to have a 51% attack? Some of these things you'll be learning in this course. What's the market cap? What's the valuation? How big is it? Okay, so we use cryptos for, like I already said, some cryptos are used as digital cash, some as programmable money, collateral, store of value, and so on. So many uses of cryptocurrencies today, and it's going to keep getting better and bigger. In Nigeria, it's really grown. In Africa, same thing. So people are using it for remittance. Especially here in Africa, that our local currencies lack liquidity. The more popular cryptos that are highly liquid in most countries make a better option for intra-African trade, and that has really worked for us. Especially here in Nigeria, that the CBN has refused to release money for international transactions. Right. So just like finance and many other things in the world, it's still largely male dominated, meaning going forward, we want to ensure that there are more women in cryptocurrencies. Now that you've known that, let's go over to knowing exactly what more things can we know about cryptocurrencies. And so in Crypto 102, we talked about how to make money from cryptos, future prospect of cryptos, future prospect of blockchain, the difference between coins and tokens. Okay, so first thing you should note first is that Bitcoin or cryptos in general can be broken down into fractional units of up to 1 million points, and in Bitcoin we call those satoshis. Okay, then in Ethereum you could call them gwei. There's some ways of making money in crypto is first by owning it, because you're owning it and you're early, you're going to make money just the way people made money from gold. They're able to mine it early and then sold it to the government or to other people that wanted to use it when it became mainstream money. That's the same way it is now. About early, you could get in now. In the future, people that will still need to get into Bitcoin because there's no other choice would have to buy from those who already own it, and they're willing to exchange a lot of their current assets, which could be real estate, dollar, naira, whatever, to get some of Bitcoin. So that in its own is a way of making money, and we call it holding, although it is spelled as HODL. So when you sell your crypto, you realize the profit if a profit has been made. Another way is trading. So there are two ways to trade. Either you can do commodity trading or financial asset trading. Commodity trading, you do it like the people do bureau de change do, or the people that sell gari and other foods. Basically, general items do. If I'm buying at 100 naira, I must sell at 110. I'm buying, or that I must make a profit. That's the point. And but regardless of the price, I'll surely buy and I'll surely sell. So it's just a commodity for me. Or I can do it like a financial asset, where you trade stocks. Use technical analysis, get a good entry, get a good exit point. Sometimes you could even make use of leverage, meaning loan from your broker to improve on your profits. So yes, you can do that. Futures trading as well, you can do that, like forex. So that's another way of also making money. But again, you have to have learned this very well before attempting it. Because as much as you can make money, you can also lose money. And that one is mining. Okay, so mining for the proof of work mechanism, you can mine. You heard of Bitcoin mining, Dogecoin mining. I mean, a lot of people made money from Dogecoin mining this year. Same with Litecoin mining. So every proof of work blockchain, the new tokens are brought via mining. So if you have the right tools, usually advanced computer systems, because it's about solving math problems to get the next block of the blockchain, right? If you can do that, you make money, because the new block comes to you and you can want to sell the block. So like the government needs gold as money. Private individuals are allowed to dig for gold. When you dig and you get gold, you sell it to the government, that kind of thing. So that's a way of making money. Another one is staking. So instead of proof of work, you can have proof of stake, where people secure the network with their staking. They stake the initial coins they already bought to get more coins. But these days, staking is now another way of using the word savings, but in crypto. So you can get even much more than the coin you are staking for, and your staking reward. For instance, previously you could stake BNB to make more BNB. Now you can stake BNB, and while you're getting BNB, you'll be getting newer tokens as well. So people can use that as a way of also distributing or marketing their new tokens. So it's now for so much more, and some of those things you'll still be seeing in this course. Another part of making money is DeFi, and DeFi in this sense just try to say that you can stake, you can provide liquidity, so many options for you. The way you can provide loans, you're not the new financial service provider. in the world of DeFi, so you can make money from that as well. So it's going to be a big deal, especially for DeFi. Okay, so just hang in there and keep learning. We're still going to have a DeFi course here at Mara. That's our Koinsandkash Academy. So just keep learning, and you should learn importantly because DeFi is new. There's so many risks attached, and if you don't learn about this, you could end up losing all of your money. Next, you have ICOs, initial coin offering. Let me generalize it to include pre-sales, initial DEX offerings, anytime you see initial, it's a new company with a new token trying to raise some money from the public. Sadly, most ICOs are scams, right? So I would not advise any crypto newbie to partake in an ICO. No, when you're much older in this space, you've learned and you've known people, you can know which ones to buy into. Right now, you should avoid ICOs. Stick to airdrops, right? Stick to airdrops. Airdrops are like ICOs, but the difference is that they are free of charge. You're not sending any coin, any money, nothing. It's free of charge. You just do some basic things like following them on social media, retweeting their posts. That is all. It's like giveaway. IEOs, okay, this is like the IPO version. So unlike ICOs, IDOs, and others, on initial exchange offering is when they will now come to a centralized exchange, a popular one to list. Now all these popular exchanges like Binance, Huobi, OKX, KuCoin, FTX, they all have their rules and regulations. So they try to get the best projects on their platforms for their customers to participate in. So you can be certain to a good extent that they have done the research on your behalf. So all you now need to know is, can that coin still go further? Can it pump? Or do you know technical analysis to make money from volatility in a range to get to that kind of thing? So I use where most older persons or less, more risk averse persons deal in their own crypto because it's more or less safer for them. Okay, so further uses of cryptocurrencies. I mean, in Nigeria and in Africa in general, commerce and remittance. So in Nigeria, a lot of people now use it for remittance. So before the CBN banking ban, there were so many remittance platforms coming up to use for cryptocurrencies. Send.Africa, Flux, even Koinsandkash. One of our test page at the end of 2020 was even doing remittance. Right, so commerce as well for buying and selling. So if people cannot see dollar they want to use to import, they use USDT instead or something else, and another crypto. So that's another big value we currently have in cryptos in Nigeria as a store of wealth again and a store of value. Given Nigeria's inflation, it actually makes more sense for you to put your money in cryptos. If you don't like the risk of volatility, then stick to stable coins. We will still talk about stable coins. Okay, it follows the dollar, and that's safer and better for your money rather than keeping all of it in naira. So if you're not putting money in real estate or in a business that is making a lot of profit in Nigeria, you should not be saving a good part of your income or a lot of your income in naira in the bank. No, not even in savings apps. No, put it in crypto. Bitcoin, the other big ones, smaller ones if you understand how they work, or simply in stablecoin, which is like the dollar. In general, blockchain can be used in so many things, right? So beyond the crypto is built on the blockchain, which is the underlying technology. This together can be applied in other spaces apart from core money and finance. It can be applied in insurance, in supply chain management, like Coca-Cola is already doing in the US. It can be applied in voting, right? Consensus voting, and even some crypto platforms also, in issuing what they call governance tokens, they also apply cryptocurrencies, right? So that's another thing you should also note. It can be used for that as well, because it's public, it's trustless, it's permissionless. Everybody can see it. No more INEC cheating or INEC rigging or anything like that. Not anywhere in the world, but everything will be public and more transparent. So other uses are real estate and generally tokenization. Tokenization is the reason we now have NFTs. You want to tokenize real world assets or even other digital assets, and you want to be sure that this is the real, asset, and you want to be able to transfer it easily without hitches. Blockchains help to do that. Also with digital identity management, education and certificate awarding, so many opportunities. In fact, it's like stage 3 of the internet. Currently, as it stands, we still have some pros and cons. The pros will keep getting more, but the cons keep reducing. Just remember that to always be security conscious and to always DYOR, which means do your own research. So what we think coins and token, right? We'll talk about that in when we get to the jargon space. Okay, and the final part of our blog post for last year was our stable coins. Right, so what are stable coins? I mean, these are really popular things you must have heard. I'm sure you've heard of Tether or USDT, USDC, BUSD. These days there are so many stable coins. It's simply a pegging. Okay, so we're simply pegging money or fiat money, which is money backed by the government, with tokens on the blockchain. Right, so it's even just to help reduce volatility. So we're trying to make all of the possible gains with cryptos and the blockchain while avoiding the volatility. However, it can't be all, because we're still pegging it to fiat, and we're trying to run away from fiat, which is the idea of crypto. It means all of the advantages are no longer there. But these days, we now have what we call algorithmic stable coins. We have special stable coins. Basically, there is the one by there's this new blockchain. They're doing something TUSD, and there is DAI. So they're trying to create stable coins that is not attached primarily to the dollar in the bank, because that as well can be controlled by the government. Okay, but leaving that aside, that's not what you should know right now. Just know the essence of this stable coin idea is that it's primarily backed by dollar, and it's supposed to get stable so that people can trade, can move money around, and can maximize the use of the blockchain. And of course, it has really helped, especially in terms of DeFi. So USDC especially has helped in terms of DeFi. BUSD, USDT have helped, especially in terms of saving and keeping your money secure away from the banks or your bank in your country, while earning good interest on it, because you still get staking rewards. So that's a really great thing for you. So that's the importance of stable coins. So you can use stable coins. So that's all for stable coins. If you're just get more use of it, you learn in the other part of this course, or in further DeFi course, you'll see more advantages and uses of stable coins. So going further, talk about basic crypto data. So this should have been part of the jargons. However, we did it separately so that you can understand them very well. They're actually the kind of things you will find when maybe you are researching a token, or they are there when you make transaction on the blockchain. Alright, first one is market cap. Market cap simply means market capitalization. They are really asking that what is the current circulating supply of that crypto. Circulating supply means supply in circulation. So for instance, Bitcoin has about 18 or thereabout million already in supply. Okay, so you multiply that by the current price. That gives you the market capitalization. Then the max supply means what's the maximum supply of that crypto. So some cryptos have maximum supply, some do not. Bitcoin, for instance, has 21 million. So when you multiply that 21 million by the current price, you get what we call fully diluted valuation. Okay, so that's what you should also know as well for that. Talking about this other interesting part, spread between the bid and ask prices. Bid price is like the price somebody wants to buy, ask is like the price somebody wants to sell. So when looking at the difference between the two of them is the spread. So lower spread ensure for better liquidity and market keeps moving. So that's what market makers try to do to close that range or that spread. 2% debt, just so you know, when you see 2% debt in the data, try to let you know how much would you need to do in that market to move it by 2%. So what is basically is how liquid that particular market is. I'm talking about market, I'm referring to pairs. So let's say you want to exchange ETH for BTC. That's a market. Okay. So if you look at the volume on a particular exchange, and you see 2% debt, it shows you how much value and order would be that you would change the current price in that market. So if I have if this market is currently trading at, let's say, 40,000 USDT for a BTC, and the volume is just about $100,000, if I bring in anything above 100,000, you are very sure that I'm going to change the market price, right? Especially if I change the value as I'm willing to buy. So it's a bit technical, but that's the idea of 2% debt. How much volume will my own transaction be that would change the current market price of that market? 24-hour volume is talking about, the volume that exchange has done in the past 24 hours on that market, right? Then that's the idea. So that market trading volume can be for all the markets, okay, for all the exchanges that are doing that particular market. Total value locked is usually for DeFi, okay, for liquidity's sake. How much value has been locked into this smart contract? If it's a lending smart contract, how much value has been locked in as available for lending? If it's an automated market maker, how much has been locked in as liquidity provision? So that's the idea. So when total value locked is greater than the market cap, you likely have an undervalued asset and you should actually buy. And the other way around, you likely have an overvalued asset. So these assets they're still new. It's not like stock market that you have established valuation methods. And this is still new, but this is that can help guide you. P&L usually seen on exchanges means profit or loss. Try just know like your bag has your bag lost value in the past 24 hours, more or less. Price is the current price, right? And so you can always change price to know in terms of time frame, to know how much it was 15 minutes ago, 30 minutes ago, 1 hour ago, last month, 3 months ago, last year, all-time high, all-time low. Finally, your transaction. Your transaction hash. So that's just a way of like your transaction ID. Just a way of identifying each transaction on the blockchain, so that there's no error, there's no mistake, and it can be easily tracked. Alright, so that brings us to the end of part A of Basic Crypto Course, aka Coins and Cash textbook.